All right. Did that intro? I love that intro. That is amazing. Amazing. Cut your losses. Cut your losses, people. Welcome, everyone. It's Monday, which means the market is open once again, and we have
Best day.
what? Best day.
The
Best
best
day.
day.
Yeah,
You look
yeah.
relaxed, Jonathan. You had a great weekend.
Yeah, that's what happens when you're up 20R on the week.
Yeah, man. No, I had a good weekend, and more importantly, I did my weekly trade planning. I think that's what that's where the relaxation comes in from. And also, I have a lot of open positions open right now. A lot of open positions, which that's always a good thing. Yeah, it relaxes you. Yeah, and then tomorrow when they're in drawdown, you're going to see a whole nother person. But today, I'm seeing the opportunities that these positions are giving me, which obviously that's completely wrong mindset to have. But yeah, that's what we're looking at right now. I currently have orders in for Bitcoin, NCD, CHF, Euro NCD, and GBP USD. I'm actually, you know what? Let's just pull up the screens right away, and I will show you guys what I'm watching on all of these. Guys, let us know in the comments. Are you in any trades? Are you looking to enter any trades? Are you let us know if you want us to look at any positions. This is going to be more of a chill, relaxed session. And for those of you asking and wondering, we are doing the 40K subscribers celebration live stream. We're doing that this Wednesday. It's going to be a slightly longer live stream, probably 3 hours. We're going to have 2 guests on. We're going to have Tom, the OTE trader. He's a very successful ICT trader. He's going to be talking about ICT, breaking down some of his most successful ICT models. And we'll also have Rich on, who's going to talk about, he's just going to be rich, and whatever he talks about is probably going to be very high quality, because that's what Rich does. He's very rich with knowledge.
He is.
Very fun. Alex is super focused on a low time frame trade that he's currently in.
I actually, yes, that is true. And I'm just setting up. I've been playing around recently with a couple of things, and one of them is the stochastics. I was just getting the stochastics actually set up on my chart. You'll be using those as well just to help with diversions. And that's it. Let's have a look.
So you're using them as the divergence and not. So what I'm
divergence, yeah, and I know diversions. I don't know where I was getting diversions from, but divergence, yeah.
You said the same word twice. It's
diversions and divergence.
Yeah. Okay.
Let's losing my English. Yeah, losing my English the longer I'm in here.
That's for another live stream. We'll do a English language webinar. Yeah. Okay, so
this week is packed with news. We have a number of course, we have NFP. It'll be the first Friday of the month, so NFP on Friday. But before we get to Friday, we'll have PMI in about less than 2 hours. That's high impact. As well as we will have Powell speaking on tomorrow, right? That could make the market move in the New York session. We also have, if I'm not mistaken, let me see, we have the ADP non-farm employment change on Wednesday. And at the end of the day, we'll have the minutes of FOMC minutes, which may not move the market like a high impact news coming out, but it will have those hours. The market can shift sentiment after those minutes, or the hours after that. Sometimes we see the move come in Asian markets, or a couple of hours after the release of the minutes. And on Thursday, we have UK election. So that's going to be interesting, how that could move pound pairs. And of course, the NFP, as I mentioned, which always is typically a very volatile news coming out. So this week will be perhaps a lot of opportunities. I think maybe a little risky as well. So it's
So
a
we
good
had
thing it's a good thing to be mindful of high volatility coming in.
Yes, very important week here. Like I said, we had the UK election and the non-farm payrolls, basically the biggest ones, and then of course, like I said, we had the EU inflation numbers, I believe as well.
Yep.
Okay, so let me just break down 4 different trade setups here that I'm currently watching, and then I'm going to break down Euro USD. Like we have a question here in the chat, and let us know, people, if you have anything else you want us to look at. Just let us know in the comments, and we'll take a look at it. So NCD CHF here is a trade based on this level. We can start with the weekly. This was a trade I took last week as well. Closed it in profit. So last week, what I was looking for was a move from the top of that weekly bullish pin bar up to the 50% fib. So I closed that one last week, as you probably saw on the nice.
I like that.
Yeah, that's a good one. And now I think this is just such a picture perfect price action right here. You have a break and retest on the weekly. Looking at the daily right here, you have what I always talk about is when you have the right leg of this move is much higher, but I talk about double bottoms a lot, and I like when they look like this, with the right leg being slightly higher than the left one, which also signals a breakout structure, or at least the first clue of a breakout structure, because that is a higher low after printing lower highs and lower lows. We now have a higher low, and I decided to actually go in at the market for this trade. Stop loss is all the way down at the daily swing lows, and I'm looking for a move up to those highs right there, and this is only a 0.5 R trade. By the way, I've used this strategy now for the last 2 weeks of last month, and last month's win rate was actually 70%, which tells most of that came from the 2 last week, where one week had 85% and another one had 70%. So it's like the win rate is obviously very, very high, although the profits, in risk to reward in our terms are not super high. So even if, a win rate of 70% sounds like super profitable, it's still not way more profitable than it was before. But the win rate just feels so good to be winning, honestly. Like it makes a big difference. Anyway, so that's the trade. And the reason why I entered the market was because of the test that we already had right here. So you can see on the 1 hour, the level where I wanted to get in was here on that retest, and we already had that retest. So I went in at the went in at market, basically, because we already had that. So just looking for another move to the upside. What I like about having these very, very wide stop losses is the fact that there's a lot of room for error. And what I mean with room for error is, so we have a level here that's a good support level right here. If price breaks below this support level, I would consider starting to look at an exit, right? So imagine we get something like this. Well, at that point, I might as well just get out of this position for minus half an hour, which means that some of the losers are going to be very small, which makes a huge difference when you have a high win rate. If you have a 70% win rate and some of the losers are actually smaller than the calculated 1 hour, that means you're going to be making, exponentially more money, more profits. Now, of course, the reason why I'm not having the stop loss here, the reason why I'm not having the stop loss here is because we might just get something like this, very, very likely. And then I'll get stopped out, and I'll be the person saying, oh, you know what, my stop loss get hit, and then it went straight to TP. Like, how many times haven't that happened before, right? And that's why I have a very wide stop loss to be able to understand when it's time to exit the the trade.
Yeah,
So that's
you're
NCTs.
you're giving the market more space to breathe, which is actually a good thing. You know, it'll be easy on your psychology because you will not get stopped out that easily.
Exactly. We have. They want us to take a look at gold and an EU. So I'm just going to I'm just going to go through this quickly. Okay, so Bitcoin. I had a plan. This weekend, right? We were trading. I think we were trading like halfway through this candle, and basically the idea was like I wanted to see something like this. That's the idea. I remember posting that as the weekly trade. Always like on Twitter every Sunday, I post a thread with. I go through all of these pairs and I post all my plans on Twitter. So if you want to see those, you can just go to Twitter, and I have my weekly trade plans there. And what happened was we actually did get that move. We went above this level, and we did actually close the daily candle above this level. Looking at the 4-hour, we have a beautiful break and retest right here. Beautiful break and retest. We had the fib from that low to that high, and you see the reload zone comes in here. It's a horizontal level, and it fits well with the FTA here and those that resistance. And the same idea here is to use a very wide stop loss. So if I would be swing trading this, the setup would look something like perhaps this, you know. And I would take TP maybe 25% here, move stops to entry, 25 here, and then 50% here. That would be how I traded before this strategy. And what I've seen is the first TP area gets hit very often, okay? But that's usually a very low risk to reward. But I've seen that the first TP area gets hit almost all the time. So that's where the idea came from. Why not just exit fully there every time? And that's why you see me having a very wide stop loss. And again, gives a lot of room for error. We can break down and we can start a downtrend, and I might want to exit here, giving me a slightly smaller loser than what it normally would have been. And look at GBP USD. Here we have a high time frame support level. You can even look at the weekly. This is a solid level on the weekly, good level on the daily. You can see that you came down, we touched this level a couple of times. And then on the 4-hour, we have a double bottom. And this is the neckline of that double bottom. And the idea here is to enter on the neckline of the W with stops all the way below that level for just a move up here, which aligns with this overall resistance area right here. So basically, it's a trade where it's like it's a combination of just buying a bounce at a high time frame level, but it's also a break and retest of this level up to the next level above. So very straightforward stuff, very simple setup. And again, very wide stop loss, giving me the option to exit the trade if it's completely invalidated. Now imagine if the daily candle closes down here. Yeah, I'm just going to exit. I'm going to exit for a half an hour loser. And then we got Euro NCD, which is, I got orders in for this as well. Based on the same thing as GBP USD, we have a high time frame range right here. We're hitting the range lows. We have a nice reaction to the range lows. We have something I want to show you guys here is on Euro NCD, we have just picture perfect market structure. You can see lower highs and lower lows, okay? That's the downtrend into accumulation at high time frame support. And this then forms one of the, it's almost only Euro NCD that this often gives us this perfect trends on the 4-hour. It got the higher highs and higher lows here. But here, I see it run into resistance, and I'm hoping that it's going to test this level just for a small move up to this level above. So that's what I'm currently in. Now let's take a look at the EU, because I know a lot of people want us to take a look at EU. We had a gap up this. You're looking for short?
No, I'm in short.
Yeah, okay. not often do we see a gap up like this on EU. It's been a while since we saw that. Not sure why. Probably because of the debates, and we had the debates in US, and we got the election in France. A lot of things seem to be changing politically, and obviously that's going to affect currencies like EU.
The far right got in. The far right has been. There's more votes towards the far right, so that was.
Why is that bullish though?
Well, look, normally when you have Labour and stuff, maybe far right, they've got better policies of maybe that traders think that it's better for the economy if the far right are in.
I mean that's what we're seeing. Like that's what we're seeing. The reaction is obviously that they're seeing a weaker dollar because of this. Maybe also because of instability. It can be things like that. But yeah, this is not a political stream. Let's not get into all of that. But yeah, on the daily, we had a nice move above this level on the daily. It looked like this morning when the market opened, or this morning when the market has been open for a couple of days, a couple of hours. I mean, we had a strong daily candle, and this was my idea from the weekend: a break and retest at this level. Although I have to wait for the daily candle to close for this to be validated, but then I will be looking to go long at the level where we currently are right now for a move up to this level. And again, we can have a very, very wide stop loss for this trade right here. I can have a stop loss that's all the way below these lows right here. So I'm asking the market for just a relatively small move, looking at the range that we're in, a relatively small move, but lots of room to the downside. But I need to wait for this daily candle to close first. Looking at the lower time frames on the 4-hour, this is a very bearish candle, obviously, and I will be looking at this and say, yeah, this gap is most likely going to get filled if it closes like this, and I will be looking for a move down to this level to fill that gap. I don't like I'm not trading these gaps is not part of my strategy because they don't happen very often in the Forex market. But when they do happen, I remember someone looking this up, and when they do happen, it's highly likely that they do get filled, a gap like this. So I think if you're short right now, I think looking for a move down to 72.30 makes perfect sense.
Yeah, I just took a scalp on gold and getting out right now. So the reason I'll just jump over and talk about the reason why I actually added the RSI, because I was normally somebody that I don't have too many indicators. Obviously EMA and FIBEX, it's really all I use, and obviously candlesticks. But the reasons why I started adding the stochastics, because I was having a problem, and the problem was identifying weak highs and places where I should go short. It was really tough for me. It was really easy for me to find longs, but when it came to shorts, I was actually finding it quite difficult to do so. So having the stochastics where I can see divergence in the strength, for me, that's helping me see places where I could get short. Reason why I got short just for that little scalp there was obviously I can see the divergence in all of this move, and it's starting to come down. You can see that was the climax of that particular move. You can see that was lower of all of the move up as well. So for me, that's just showing that this move here is not as strong as this prior move. So for me, that's an indication of weakness, and now I was happy to take that short. It's funny because this morning there was also a divergence on the long side, and this is why I got long on a different account. I was a little bit greedy, and I actually had my stop here, and I was taken out and didn't actually get back in. I actually went into euro instead. So I did miss on this trade, but you can see here you've got the divergence right there. This is also on a 15-200 EMA, and you can see as well you've got that divergence. You've got this area is also lower than that low, so the divergence is there. For me, that was extra confluence why you would go long. With regards to EU, So I took 2 trades on EU today. I'm already out of the first trade. That was posted in the Telegram group, so make sure you're there, guys. I'm only joking. But
I'm like, wait a minute, I don't have any Telegram groups.
Which one?
No. So the first trade was obviously back down from this area. We saw obviously price could not, first of all, I saw this price breached this EMA, and obviously if we see a breach of the EMAs, naturally we're looking for price to come down to the next EMA. There's a lot of air in this area. You can see this is just bunches of air where I look for price to come in and just fill that air. We had this push up, eventually we broke down, and that was the trade. I actually got in on this candle. You see we even got a retest and a continuation. My take profit was right at that particular low. Now the reason why I got into this trade here is again because of the divergence. So we've had a massive run up on EU, quite a lot for EU to run early in the early morning, especially just at the just pre-London. So then you've got obviously prices sloping down or trending downwards, but you've got the divergence of just everything is just flat with regards to that. So on top of that, you can see if you just inverted this chart, you would see the break, the retest, the continuation. That is like the bread and butter setup that I would do in general. And I am looking to take the price down to the bottom of that move. That's where I'm looking to get at. We've got news coming out, so I'm not looking to hold this for very long. If it doesn't do anything, if it starts to consolidate here, then I'll probably just close it at either a break even or just in a little bit of a profit. But that is it. Victor, it's up to you now, buddy.
Yes, I'll put my screen on. I'll show you guys what I have been.
Can you check EU, and then after that we'll take a look at gold.
Sure. EU. What I noticed is that the close on Friday actually made us a new weekly bullish structure. So that is significant. That is something I for sure want to be mindful of. And where does it do it? It does it within a monthly order block. So that's alignment that I want to know about, because that means things are lining up. We may have, even though it looks on the higher time frames, on the weekly and the daily, it still looks quite bearish. It is forming something that could be a structure that could be moving price higher in the next couple of sessions, right? That's what I'm thinking in considering the weekly that just formed, and within the fact that it did it within a monthly bullish structure. So if I go to the daily, what do I see? I see we did bounce from this daily order block, which I didn't have put on for some reason. So that also, we have the daily, the weekly, and the monthly telling us that this is a great area. However, for a continued or extended move, I would have wanted price to reach this demand area, which it hasn't yet. Maybe it's still going to do that, maybe this week, maybe next week. Maybe in the volatility of this week, we might get some surprise news or high impact macroeconomic release that might push price momentarily in that area. And if that's the case, then I will want to be a buyer if I see market starting to transition back into a bullish stand. So that's something I would like to see. And that's the same idea with the weekly order block. Right now we have the daily order block, the weekly that has just formed and actually gapped up. And what I would be wanting to see is price coming back into this area for that move out. If that happens, I would have then a weekly setup that doesn't come along very often. But if it did, I want to be a part of it. And my target would be the next structure in the same order, in the same time frame, right? If it rejects with a weekly candlestick formation, like a pin bar, a engulfing outside bar, etc., on the weekly, right? It has to do it on the weekly. If it does that on the weekly, then I can target a weekly. I will take that as a sign that the market on the weekly time frame, has signaled, and I couldn't then target. It would be looking something like this. If I can, let's go back to the daily time frame. If that were to happen, then we could be looking for. If it happened in here, then of course your trade would be something like this, quite nice, even with a 20 pip stop loss, which may be a lot, maybe not that much for a lot of people. For me, that would be way more than I usually do. If you're like myself, only for a few pips, it can easily give you 1 to 20. And what I'm thinking is, okay, this is the weekly.
That's insane. Like every time you show that, I'm just like, wow, that's crazy.
Well, maybe we can see the position developing live. That could be nice. I have to say though that the win rate is of course not very high, so I will have to do it a couple of times, and one of them will take it. And when you do it often enough, it will end up being, if you did everything right, it will end up being a profitable sequence of trades, but not necessarily each one of them. But okay, so we have the weekly, the daily. But what I see is, as I said, I see that there is a on the bigger structure, right? The bigger quasi that I see here on the daily time frame. We still have that daily. That's the break of the daily, and we haven't tapped into this order block yet. And I would expect, if that's how I trade, I want price to interact with that order block, then to move out. If it does that, then it will make not only sense to target this, but perhaps even to go target something a little bit higher. I see a lot of structures here, so I don't want to be extending it too high, but perhaps even a little bit higher. And if that were to happen, if I'm able to catch a transition, let's say 10 pips or 8 pips from here, and I'm able, and it does signal on the higher time frames as well. So not only a entry for an intraday setup, but actually on the H4 confirms with a building structures on top of each other, bullish structures, and the daily confirms as well. So it's something quite conditional. But if it does confirm, then I could be targeting perhaps this much higher, which would be, in this case, it's only 22, but 1 to 22. But to be honest, 10 pips, I almost never have those kind of, if I'm able to catch something quite tight, let's say into the 4 pip range, you can see it goes above 1 to 50. So let's see how that will be per trade, of course. So let's see if that opportunity presents. And we'll have to see it day by day, because this is something, of course, on the higher time frames. On the lower time frames, what I would be looking for is, I saw there is that, let me see, we have a trend line. I don't trade trend lines, to be transparent. I don't trade them, but I do know that we have all seen this so many times. When price breaks a very obvious trend line, which is very clean, like this one, it typically comes back in some form or fashion and retest that from the other side, right, before it continues. It doesn't always work perfectly, but so that is something that I wanted to show you guys, even though I don't trade it. But in terms of opportunities on the lower time frames, I see this quasi happening, breaking of that structure. It already made that right shoulder, right, as it moves out, but also it can continue to come back and interact with some structures that it left behind, mitigating the structure as it moves out. So that is something that I'm going to be looking for maybe today, maybe coming days. And it makes also sense because it will be filling the gap if it were to reach these order blocks, right? This is the gap, of course. Let me open that a little bit bigger. That would be that is the gap. So it will have, there's no other way. It'll have to close that gap, fill the gap to reach this area. And I would be waiting for price. I'm not going to be buying anything unless I'm not going to be buying the retest of the trend line. If this is all it comes and moves out, that's going to be fine. It's going to go without me. I'm not gonna chase it. I'm gonna wait for price to come to where I am interested in. That's the H4 entry order block, and there I'm gonna go, of course, to the lower time frame to pinpoint where the rejections are, the structures, quasi, etc., to get my entry as tight as possible. So that's something I'm gonna be looking for in the coming hours. Maybe it's gonna be something for tomorrow, but currently I'm not doing anything on EU. I'm waiting for price to retrace back, fill the gap, and show me it wants to continue up. I have a. Do you want to analyze gold, or would you like me to look at it, Jonathan? Or was it some other pair you wanted to go to?
I can look at. Oh, wait a minute. We got Ash in here. Could you, Ash, my dear friend, give me. Yeah, let's not tell Alex. He'll figure out himself.
Oh, you're so funny, Jonathan. You're so funny.
Ash, I want you. All right, listen. Before, were you turning it off? No,
I have to turn it down.
Right,
I have to turn it down. It's really loud.
My mic.
Yeah. Now speak.
Yeah. Well, can you hear me now? Are you turning it down for everyone else though?
There's a setting, right, in the audio, in the mic, where you can set it that it automatically adjusts to, I don't know, to some standard level.
Let me see if I can.
Oh, I've turned you right down now. No.
Okay, automatically adjust mic volume. Now it should be good now. Sometimes
Is
I'm
it just
all.
me then, or is it just is it you? Are you really loud, or is it just me? Oh no, I've got
sometimes
my stereos up super loud.
Yeah. Okay. Sometimes I'm loud though, but yeah. Okay, Ash, I want you to give me your setup on gold before I analyze it. Okay, so give me a TP for long or short.
Midnight.
Yeah, Victor, I wanted to talk to you.
Retrace continuation though. In all fairness, getting out my.
What are you talking about?
I'm talking about gold. I really do think it looks like a retrace continuation type of trade. Like right here, I'm not as good. I reckon it will be retraced to around that level, to around 2332 for a continuation, which is we're at the top of the range. On this time frame, let's have a look here. Get rid of all of this. Then again, we are in the middle of the range as well, so it's a little bit tricky.
Let me give you my quick analysis on gold, because it's just very simple. So this is my on gold. This is going to take a couple of days to play out, if it's even going to play out. I'm not looking for anything else than this on gold, because when I go into the 4 hour, I'm not really seeing anything. I mean, there is a possible short opportunity if we break below these levels, and then maybe on the lower time frames we might hit that level. But I think where it's very clear is on the daily. I think this is where my trading happens. Usually it's on daily level. So that's what I'm looking at. I'm just looking for a break and a retest up this level, and the continuation to the upside to take out these highs. So the trade here, I would TP at around these highs, probably front run it a little bit, and then again look for that would be the setup, very wide stop loss, but it's still 0.77. It could have it all the way up here for a 1 hour trade, but I'm thinking like that's going to be my trade, a daily range play for gold. All right, Victor, I think you're probably looking at a way different analysis than I am on gold.
Not really. Mine idea, of course, I have different reasons for it. To do the same, but it basically is the same. If I look to the weekly, what I've been saying a couple of times is it looks on the weekly we have 3 structures being formed, the last one being an outside bar on the weekly, telling us that these sellers are taking control. So I'm thinking, okay, so maybe price will be coming into this supply area and eventually go down, right? That's on the weekly. The first thing that I would think. There are 2 bullish structure being formed, but it seems to me if you add things up that the sellers are getting control back if you only look at the weekly. But if I go to the daily, I find indication that perhaps we may go up from current prices, or we already started. I don't like to do this, to look for these structures when price is, at the top of a movement. You shouldn't be, as I mentioned a couple of times, this quasi that I'm depicting right now. That's the quasi, right? It's the minimum to satisfy the criteria to be a quasi in my book. It is, but it is breaking that neckline, going all the way up and coming back to retrace and retest that entry order block. And what does it do? It gives us engulfing there, and it gave us another engulfing as well. A second, you could say, indication that price indeed have rejected, are trying to rejecting, and they closed as rejecting this order block below us. And so my idea would be to that this would be, perhaps we'll be trying to retest that high in the near future. I don't like this structure because it's a bullish reversal structure that should be at the end of a downtrend, not at the end of an uptrend. So that's one issue that I have with it. But hey, it is forming, so I would give it less weight, I would say. But still, it is present, and it is telling us that it is rejecting not once but twice this order block. So that is one thing. And so there is a case to be made for a bull run for gold. That's one thing. And the other is the macro structure, right? The higher time frame is still very bullish. So the fact that it is forming that reversal, even though it's not a good reversal, it is pointing us in the same direction as the market structure, which was still making higher highs on the higher time frames, right? Higher highs and higher lows. It hasn't really broken anything yet. This would be the structural break for gold, this low, which hasn't been not even tested, right? This one, that's the level. So the fact that the quasi is putting me to go long is aligning with the structure we already had, the market structure we already had. So that makes it okay. I think I would be able to take this daily, even though it is not the perfect quasi that I would like to see. That's one thing. The other is we have structure on the daily being formed, and not only this is the daily order block that has been respected twice. The other thing is that we are forming more indication, because the order block that formed has been retested and confirmed by forming another order block in the same area without invalidating it. That's typical of how price wants to build up those bullish structures before it goes up or as it goes up. So, and what do we see today? It closes as engulfing, retested Friday, and today it has quite shallow of a retest, but hey, it is up from that retest, and maybe that's all it needs to move higher. How much higher? That's a little tricky. As I mentioned, this area is very significant from a supply point of view. So I don't know if we should be targeting anything higher, but it could. I mean, it's nothing is written in stone. So this could be the continuation of that bullishness we have seen. This could be just the consolidation after the impulsive move that we had, right? This impulsive move, we had some consolidation, and perhaps now we could be continuing. Perhaps that could be something. So I'm not too sure about the TP, but I can see prices telling us that it wants to go up, and it's likely to keep on doing that. Safe, new structures in the future telling us otherwise. So that's what I see. And if we go to the lower time frames, what do we see? I can find a quasi, but I don't see any order blocks that tells me that this is a great area for me, at least in my way of trading, to be entering yet. But I mean, you could be looking for other ways that would be the neckline on the H4. And I would be looking for an entry in this area below that 50%. So I would say something in this area would make sense to me, but perhaps price will not even reach that. If it comes to that area, I would be interested in buying and going long. Anything in here, I'm not interested unless it goes a little bit higher before coming back. If it does something like this, then yes, that will be an area that I'm interested for that continuation. So that's what I see. I'm looking for a long as well, even though I have a little bit of hesitation and my doubts in terms of the quasi. But other than that, it looks good for a long. I agree with you guys.
Nice. You know, Alex, maybe you can. But I think you already showed what you think on gold. You look for low time frame retrace,
Yeah,
right?
Look, the only problem is obviously we'd be still stuck in this massive range, midpoint. So that's why we can see quite a big reaction right now. A big reaction. We can see quite a nice reaction right now off.
I'm gonna put your chart on. Yes.
No, so nothing really has changed. We're still stuck in this range. We had that deviation, the overall like 80% of the volume. We had that nice deviation there. Now we've come back, and now we've had a hit of the middle of a range. This is quite a nice candle as well. That's quite a nice candle for price to actually fill that wick, and it did fill that wick pretty much. And now we're seeing a nice push down. So I can see reasons why I would probably like to take a nice long. I can see reasons why I would want to go short. If I would want to go short, I would want to see maybe a nice test, take the high, and then obviously a fail of a breakout, and then taking it short to take out all of these, all of this area here. But that's it. I'm still unsure. Obviously, we got the news coming out very soon, so you don't want to be in positions for too long. We're starting to show divergence on the 1 minute. The 5 minutes still has a little bit more to go before it actually shows any proper divergence. But you can see here right now. Some guys cleaning the windows outside. You can see obviously price is higher, and then you've got a divergence lower. You got lower lows on the oscillator, so I can see why it would push up a little bit more. But again, I'm not sure. I don't think I'll be trading this anymore today, to be honest, until we actually see some movement. Euro, I got out here. I don't want to be sat in any positions at the moment, so. Where's Jonathan gone? He just disappeared.
I think he was setting up something before he went offline. So I think maybe he's arranging something with his camera.
Yeah.
Or something else. But yes, so you're gonna be you're not gonna be trading gold until after the news, if anything.
I would like to see at the moment. There's reasons why we would go short. There's reasons why I would go long. And if I'm like that, I want to be either. The reason why I went long here. This morning. Oh gosh. Let me move this. If I go onto the 5 minute. The reasons why I would go long here, well, it was actually here, but the reason why this worked, I saw the divergence on the lower end of the chart, and I also saw a lot of space here for it to fill. It's already filled all of that space. Now you're already at resistance. You've already had quite an aggressive move to the downside. There's not really to go long here. Maybe there would have been if we found a little bit of support in this area and it started to consolidate a little bit. Maybe had one of the those like a W pattern, a break at the top, retested, and then it could get in long for a continuation. That would have been a nice move to the top. Yeah, I'm a bit unsure. S&P. Let's have a look what the S&P is doing. Nothing. The DAX. The DAX. Okay. Wow. That looks quite nice.
Yeah,
That
that's a
looks
nice
like a nice trade.
retest. Yeah.
Wow. There you go.
Nice.
There's a nice trade. That's a nice trade that you put there. I
Almost
don't
a
trade the DAX.
perfect retest
so-
of that EMA.
Yeah, it's a really nice trade. We can just put a little bit of size, just a teeny bit of size, just to play with the trade. Obviously, I don't trade this, so I'm not just gonna just jump in bar. But that's really nice, really nice. How's that $490? That just one contract. Wow, it's a little bit too much size. Okay. Let's see. Yeah, let me just halve this because I don't really want to just put on a little bit too much size on something that I don't trade.
Is that the minimum size, or is that?
No, I'm gonna just take off half of the size just because, you know, it looks good, but if you don't trade something and then you just jump in like that, then. But it looks really good. You've had like this, you know, come back into this area here. You found support. It's broken up. It's retested the top of the range. Like, why not? Like, it screams. Trade me, take me long.
Yes.
That's what it's screaming.
It is, and it's reacting so nicely to those EMAs. I mean, that's to me is indication of, you know, where you should be looking at.
Yeah.
Right. When price respects an EMA that not perfectly, basically, it should tell us something.
Yeah, you got Divergence as well on the 5 minute. I really love trading Divergence. I haven't traded it in a long time, but I felt like I needed a little bit of something just to help me with the confluence, because I would get into some really nice trades. There are other trades where I would want to get in, but I'd kind of hold myself. I don't know why. It was more normally on trades like short sides, because I had the eyes. I had good eyes for longs, but seeing the short was difficult. It was harder for me. So the Divergence is super. It's helping me a lot, because I used to use Divergences a lot, and then I just thought, you know what, I'm gonna clean up my chart and get rid of it, and just. But it's nice to have it back. So you got a Divergence. Let's have a look and see what happened with this move. So again, look, this is why I love them so much. Look, you've got price taken out that high. You go on less strength. So all of this candle here, you haven't even look at where it is compared to obviously its last move. So this move was a lot stronger, and then when it's come back to take everybody out, that's on a lot less volume, a lot less strength, and then it's just come down, broken the lows. You had that retesting, it come down as well. But that kind of this little range here, price just smashed straight through. If this was going to hold, or you would want to trade this, you would like to see maybe price come down, and then you would like to see, okay, like a little bit of consolidation, and then maybe continuation. But if it's just smashed down and you're thinking about just longs, then maybe really you should think about changing your bias, because it's quite a lot of volume. But the volume compared to when it comes up, you've got all of that volume. Now look at the volume now it comes down. Look at these massive kind of candles, these much bigger candles, which
convergence or divergence, I should say, is can be like a signal. I have traded in the past. It can be something like part of a bigger system. Is always what I thought about it, because I had some difficulty spotting or having a high win rate if I only use divergence. So it would need to be something, you know, it's something part of more things you look at: structures, EMAs, perhaps liquidity, for that's something you do, and then divergence can be very powerful, because it will tell you where
it's a confluence, that's all.
Where the steam is, when the price is running out of steam, which is that top, that second top, that's price going in, making higher highs, but not having the power to continue. And after that, it's gonna crash down, and that's exactly what it did. It came down like a brick after that high.
No, I agree with you. You can have so many different tools and things, as long as they're tools to help you with an overall edge, not just relying strictly on that. Like, if I had to put the way that I trade market structure with returns to average price types of way. That's how I trade. I've got momentum plays and things like that, but I wouldn't get into a trade if I just have divergence. It would have to be divergence with breaks of market structure or with overall context of why I would get into the trade. Otherwise, you're just going to end up just seeing every kind of divergence in price and then just going to be shorting or longing and blowing up your account.
Yeah, I agree with you. I think it's something I would assume it's something universal for everyone, because there's no one single thing that that's the only thing you need, and when this happens you hit it and you're going to be profitable at it. It's probably not going to be that simple. You probably need a couple of things to help you filter out those times that typically that one indicator alone will not able to tell you where the profit is, where the edge is. And if I make that parallel to how I trade, I did this actually. I traded all H1 order blocks for some period, and I traded them without looking at other time frames, without looking at reversal patterns, and it was only slightly profitable, very slightly profitable, but not something to write home about. And while order blocks, I'm so convinced, I'm so such a believer in order blocks, and I see that confirmation when it reacts to them all the time, even if it's not always the time that it reacts to them. But I see when it reacts, it does it so cleanly. But the order block on its own is not enough. I need more things. So I need the higher time frame confluence. I need the quasi to tell me if it is going to reverse. And even then, it's each one of them has their place in the strategy. It's not something in my trade system. It's not that I can choose just one and trade that, and that's going to be all of it. And that's, I think, the same thing with divergence. It should be part of a bigger system, which each one of them complementing each other for to get that result you're looking for. I think it's something probably universal for probably everyone, but I'm not.
Yeah.
Of course, I don't know that, but that's what I would expect. Jonathan is back.
Yeah, guys, reminder about this Wednesday. We're doing the 40K celebration stream this Wednesday with the special guest and special giveaways. It's going to be awesome. Be there, join. Because I'm getting a lot of questions on that in the chat. But and wow, there's so many good possible trades right now in the markets. It's just this week can, but like I say. A lot of Mondays that's I see the same things. A lot of Mondays that you have a lot of good trades being potentially confirmed based on a daily, and then Tuesday gets get retraced, and then you see opposite direction throughout the week, or at least on Tuesday. I actually had a rule last year when I was trading a little bit differently. I had a rule that says do not trade on Mondays, because I had like a 20% win rate on Mondays and almost like a 60 or 70% win rate on Fridays. So usually what I would do is I would just take the day off on Mondays, not trade on Mondays at all. And I think that's still true to a sense. If you look at the EU, I wouldn't be surprised to see this daily candle even close as a bearish candle, a clear fake out. You can this one right here. I mean, we started the day saying like, oh wow, look at EU is breaking structure, and we're probably gonna end the day saying this is a fake out.
Well, no. If you look at the Dixie as well, start of the session, the start of the day, it was at resistance. Now it's come back into demand. You know, the
Yeah.
start of the day, it was at an area where you could be like, okay, Dixie is at a place of resistance. You know, everything against it looks it's a place of support. So you play the direction. But now, you know, after a little bit of trading, obviously all the news from Europe has come out. Now we've got the news coming out in a minute. We can see, not in a minute, in about half an hour. Now we're going to see some really what is going to happen, because this could just be, you know,
So I almost had my
volumeless moves.
I almost had my GBP USD orders filled here on this move to downside. I think, you know, that's the move that I was looking for to get filled on, but we'll see. We got the what's the stop loss in this? 57 pips stop loss. Is a very wide stop loss. We have news coming out in 1 hour, 4 minutes, right?
Yes.
The Dixie, the DXY.
Yeah, the Dixie. All right, so we have a lot.
I have a setup on GU that I'm looking for. Maybe I can show that.
Get it out, baby.
I
show us.
Oh, yeah, okay. Yeah.
Oh, you want to show something, Jonathan?
Nah, go ahead, Victor.
Okay.
You want me?
Of course, I see we're coming from a bearish on the weekly order block. So, and we don't have any weekly order block where that wick is. The only thing we had, this big area, this purple area, is a monthly, but monthly are not as precise. So I know we're getting in a broad area of demand, but it's not something I can use readily. So I know that and this is, I don't know if you guys can see that. Let me open that up a little bit more. But we're coming from a weekly outside bar. So I expect that this move that we have, the outside bar is this, right? This is the, let me show you guys. No, that's not the tool that I wanted. It's this bar, right? That was the range of the next bar was outside of the range of the first bar, and the close was below it. That's an outside bar. And typically outside bars would mean that price would be going not necessarily right away, but in the couple of next sessions, it'll typically come back. If anything, it doesn't always come back, but come back and then move quite some space. So I would expect it to go to the next weekly, at least at some point in the future. But that is on the weekly. That's the background. That's the panorama I have, or the expectation I have. But within that, what I see is, if we look at the daily, we have we did have this order block that was, if we look at the close was below that low that formed the order block. So this order block has been invalidated. That's a bearish sign, right? It's a bullish structure that was invalidated. Even if price is now coming back with 3 bullish candles afterwards, to me, this is just a retracement for pricing going much lower, since it broke that bullish structure, right? That is typically that's how I reprice, by the formation or the invalidation of bullish or bearish structures. So it broke the bullish structure. So to me, that means it's going to probably have a easier time continuing going lower. And what do we see next? We see a daily order block that has been, or is perhaps today in the process of being retested. It is quite fresh. So that is an area I want to be shorting. If you go to the 4 hourly, what do we find? We find a structure here, right? Which is, it's not perfectly drawn, but that high should be at that wick, but it doesn't matter. And we have this break of that neckline, right? And it's coming back. And it's coming back at an area that that according to the quasi is an entry area. So we don't have an entry area on, this is the H4. We don't have an entry area on the higher, the head of the structure, but we do have entry order blocks here. So we have actually two. They're very tight to each other, which is not optimal, but it still can give us entries. So I'm looking for something like this. That would be that's the quasi, right? It's minimum. The trend from where it is coming it's barely minimum to be considered a trend, but it is higher high and higher low, so it is valid. So what I'm looking for is price to come in. So I'm going to, when I see this, I have the daily telling me this is a great area to be selling. I have the H4 telling me that this is a great area. Actually, there are two areas very tight to each other telling me that this could be an area where sellers will be coming into the market. And I go to the H2 and H1 and try to pinpoint that area. And these yellow lines are what I then come up with. That's I try to refine that area into an area that I can, with objective rules, not just, saying I want to be trading this because I like it, but objective rules. And it's an area of about 15, actually less than that, 13.6 pip. That's a nice tight area where when price gets there, I can look for that reversal pattern. And if it comes, I would be taking it. And that could happen today, that could happen tomorrow. So we'll have to see that. That's something that I would be taking. And if, let's say I take it and I have my typical stop of about a few pips, let's say it happens here, or maybe a little higher, maybe a little lower, I would be targeting not in the end, but ultimately I'll be targeting that low. But depending on the time of the day, I could, adjust my TP to be some other structure that is in the whatever on the other side, FTA, leaving some open if I think it's going to be running much longer. But that already gives us about 1 to 13 if we do get that tight area, which is not always with GU. Typically my stop is a little bit higher than on EU, but even still then it's not like way above 10. It's maybe 5, maybe 6, 7, which still is, as you can see, it gives us something like in the range of 1 to 10. So that's something I will be looking to see if price presents that opportunity. As I said, today could happen tomorrow. And if it happens within my trading window, then I should be on it. Yeah, that's the setup that I'm interested in looking. Oh, another thing, if it happens, right? Because we do have a daily order block, right? Another thing is if it, let's say today finishes as a bullish structure. Let's assume that for a little bit, or even tomorrow, right? A bullish candle, and the day after the entry, it reacts very favorable. In other words, it gives me my entry and then moves quickly much much lower. If that happens, and I think by the end of the day, while I'm ready to close the whole position, and I think if I can estimate that the candle will close as an engulfing, a daily engulfing, confirming the rejection of that daily order block here, then I would be able to target for sure that low or even lower, which would be that low. That's the higher time frame setup that I could, that's also a possibility. Assuming you get let's say short, this is the short, you would get then let's say you get something like in the range of 7, 8, whatever. And if that happens, which doesn't happen very often, but if I can get a little piece of that from that move, and it confirms on the daily time frame, then I can leave either not the whole position, half of it, take all of it at the end of the day, or leave half for the daily target, which would be that order block right there. And that should give us with a stop of about, let's say 5 or 7 pip, which is very reasonable to catch on the lower time frames. You should give you something into the range of 1 to 18. Of course, if you have a much smaller stop loss, that would be double or triple that, but that's not always possible. So that's something interesting that I will be looking. Yeah, that's on GU.
Yep. I mean,
who's gonna short euro? Go on, who's the guy that's gonna short euro right now? Because I am looking for
Well-
it, and it is looking juicy. But
well, I am.
That
Yeah,
DAX
I
trade
did-
though, let's have a look. Is not actually doing anything.
I did take a short on EG though, but that is not looking great. The Euro NCD, like the only trade that I didn't get filled on is the only one that is looking really, really good. Euro NCD have these beautiful trends. Oh, DAX looks good as well.
Yeah, I'm not too. I don't trade it, so I don't know it's.
It looks like you're trading it.
Oh no, I'm trading it now. If you can put it on a screen, it can be traded.
Yeah, exactly. I think that that's interesting price action.
We had a H4 order block just formed a couple of minutes ago on EU. So if it goes retest that could be a reason for me to short EU. If I have multiple reason on multiple time frames, let me see. I don't see it.
Screaming short, man.
EU.
Yeah, I want to short it.
Let's see.
Really?
I want to
I'm
short
gonna-
it. Sure, we can short it on really low volume, just for the for the crack, and obviously news is going to come out.
I do
What-
think
what I-
EU looks like a good long.
Yeah, I know. That those candles, those wicks on the H1 tell me the same
Yeah.
as well.
Yeah, it's
But
right
if
right
I-
into support.
Yeah, and it's retesting the that high. I perhaps that's the why you call that support, right? It's retesting on the other side that resistance that was broken to the left, right? The high on the 25th and the
No,
24th.
I'm thinking if you zoom out even more, but you're on the 5 minute though. Like I'm looking at the 1 hour.
I'm on the 1 hour
If you
as
look-
well.
Now you're on the 5 minutes. Now you're on the 1 minute.
And
What 1
that's
hour?
Alex.
This is me.
That's Alex.
Yeah, that retest after 20 EMA right there. That's support.
Yeah, fair enough. I can see why you'd want to go long.
I'll show you my chart. So I can see how price was trying to break these high, and they did, and now is retesting it from the other side. So this looks like a good long, and I agree. What I do see is that there is an H4, right? That's this one. Let me mark that as an H4. It's very fresh. And we don't have anything on the H1. I'm sorry, H2. H1 does have a very broad order block, which I don't like when there's no refinement, but still, and it's 21 pips, which is for EU. Let me calculate. That is too much. Actually, I don't have that. This is not an entry order block. So, yeah, that's one thing I don't like. That the H1 is too wide, and the fact that the ATR hasn't reached it's 100% yet. And I would rather wait for it to show me that it reached it 100% ATR before I start trying to short this. I will not be taking this. If it comes here, even if it does a quasi, I'm not going to be taking that. Or it needs to form some other structure in the near future, like in a couple of hours. A new structure, a new reason for me to short that. But save that. I'm not going to take it.
No, you're not going to short. Sorry.
No, I'm not going
Or
to
long.
short it. And
yeah.
no, long. I'm going to be waiting for it to come much lower, to in the range of between 715, 16 to 705. That's the area that I'm going to be looking for a long again. So that's quite
I'm just
some
shooting off trades today, man.
Yeah, it's crazy.
I'm shooting off way too many trades.
Yeah, same here. I got a few Euro NCD. Like I gotta go over and like show you guys this. This is such perfect market structure right here. Just look at, you can remove everything here and just look at this. You know, Euro NCD is just amazing at you know, creating these trends. Especially, you know, you have when you get something like this, you can clearly see the lower highs and lower lows right here into accumulation here, and then it forms this uptrend again. And it sucks because yesterday I was awake when the market opened, and I remember checking the charts when the market opened, and I had this up, and we were trading right here. And I was thinking, like, what if I just place an order? Like, what if I just enter right now with this order, and that it would have been filled right away, and it would have been just hit that TP right away. So it's a bit like, but I was lying in bed. I was about to sleep, and I'm like, this is not the time to be trading. But I've also made the plan, you know, and the plan literally looked like this, you know. So I don't know, like,
what does your trade plan say about the setting at which you're allowed to taking entries? Is there anything that tells you that you should be sitting at your desk to go through all your, you know, steps you do, or are you allowed to be taking it, let's say in bed, or you're taking coffee and, you know, something a notification came, and are you allowed to take the trade right there, right then, or should you be at your desk necessarily?
So I'm not trading on Sundays, you know. It's like that's one of the rules. Like at market open, I'm not trading market open, and I'm not trading market close. So I'm not opening, like, I don't want to open a position right before the market closes, and I don't want to be open a position right when the market opens. Like, because I feel like that's just, the spreads are widening. There's low volatility. You never know what's going to happen around those times. Like, I might open an order on market open on Sunday, wake up on Monday, and you'll have something completely different, you know. So that's and also if I feel like, you know, if you open, like, maybe you just have you feel an impulse to open up TradingView on your phone and you see a trade, that's also a good time not to be trading, you know. I'm only really trading when I'm in the office, or I'm on the laptop and I'm in an environment where I plan to actually do trading, where I've planned to go through my list on TradingView and enter orders if I can. I think that's I try to only trade in situation where it's not impulsive.
Yeah, in my case, let's see. What I use is, when I'm not at my desk and I'm looking at the chart, what I try to do is, since I typically, when I want to enter, I need to be on the 1 minute, the 3 minute, etc., and the 2 minutes. What I would do is I don't go below 1 hour on my phone. So I'm only looking at H4 just to let me know, H4, H1, just to let me know if I need to go to the desk or not. And that's the only reason, that's the only time, or the only way I use, you know, TradingView, you know, to get me into a trade. It's like, do I still have 1 hour to wait, or can I, or do I need to go to my desk right away and start, you know, going through the steps on the lower time frames or not? So I don't like trading on my phone. That may be something personal, but that's not something I don't feel comfortable, because it's not as efficient to me. I'm not that quick on the phone. I want to have, you know, multiple screens on, my fingers on the hotkeys. I can't do that on the, and also I can enter, because I enter with the position size calculator. So I need to do it on my desk. It's way too slow if I'm going to be doing it on the phone. My stop loss is sometimes up to 2 pips small. That in a few seconds it can move from 2 to 2.5, and that, to me, that's a change of 25% of difference in the amount of pips. So that's the difference in the lot size as well. So I need to be precise with my entries, and that's not going to work on my phone. Other than that, I do see value in, let's say I'm away from my desk and I have like a binary level. If it reaches this, I want to do that. Or if it's reaching the end of the day and it hasn't reached this level yet, then I want to do A or B. That I can do on my phone, like closing this trade, or perhaps closing half the position. But entering is, to me, in my case, is too of a delicate intervention to be doing on the phone. Yeah.
Yeah, no,
There's
I agree
someone
with you.
There's someone asking. Go ahead.
Yeah, no, trading on my phone. It's a good subject actually, because I know a lot of people are trading from their phones. I mean, so what I do is if I have so again, I do all my planning on the weekends, and I'm only supposed to be trading those plans. So right now I have about 6 or 7 plans that are actionable throughout the week, and I'm not supposed to be taking any other trades than those actual plans. And so if I do get an alert, let's say I'm in a vehicle or traveling or just outside, most likely it's summer, I might be on the beach with the kids or something like that, and I get an alert and I only have my phone with me. Well, if it's an alert on a trade setup that I've already planned, I'm just gonna calculate the position size on my FX book or whatever, and then enter orders. I have no problem with that. The problem though is I have a rule that says never take a trade where the analysis is made on phone. I even bought this Samsung Note, like when it came out, like a big model with like a pen and everything. I'm like, yeah, I'm gonna use this phone to trade, with a big screen and a pen. But it's just terrible. Like it's terrible. You need to feel good about the technology that you're using. With that said, I know there's a lot of people out there trading on a phone. It takes a long time. It takes a long time to do all the proper TA, and you need that big screen. You need that zoomed out look.
Yeah, I think another thing is it depends as well. Let's say if you trade with fixed lot size, then, for example, in that would change things completely for me, because that's one reason I cannot do it on my phone, because I don't trade fixed lot size. But if I were to do it, then maybe it becomes an option again. Then I will still have the issue with the analysis, as you said. I don't feel well looking at a screen so small.
Yeah, and I mean, you also you open a lot of positions on one setup. So you might have like 10 positions open on one setup. And obviously, like, I enter orders maybe once a day, unless today, where I'm doing it like 10,000 times, it seems. But usually I'll enter orders for like 1 or 2 setups, and then I'll wait a day and see what happens. So it doesn't matter. Like, as long as I made a plan, I can put in the orders, and then I don't have to watch the screen for the next few hours,
Yeah, and perhaps if a trader is on the higher time frame, right, the entry is on the hourly with the hourly close or something like that, then on the phone, you have plenty of time to go through, your entry criteria, and 5 minutes later, you're still able to catch the same entry. I don't have that luxury. I need to be in, a minute later is maybe the price doesn't come back to where I wanted to enter. So I that's something to be considered. Also, I market order my entry. So someone who may be putting in limit order, they're much more able to, wait and do it on their phone, because price are not there yet. They're putting in a limit order, which price may be getting there in a couple of hours perhaps. So it depends a lot on the type of strategy and trade plan and person. Not necessarily, it doesn't have to be a something not to be done by everyone. I mean, it's different for everyone, I think. But there was someone in with a interesting question that I wanted to bring up. Birash Shankar Singh, I hope I mentioned your name. Thank you for the question. Why do you think there are so many gaps on Oanda chart? Let me see. Let's see. Which one is it? Isn't it that one? It's this one. Yeah. On the lower time frames in TradingView today, this is not normal. Well, the actual reason I don't know, but I suspect it is what Jonathan said at the beginning of our stream. It's the French election result that changed the political arena, so much so that price at the open, where the buyers and sellers were not able or not willing to trade at the same level it closed on Friday. So they start at a different level. And that is basically what a gap is. When price, because of the market was closed, and the market, the buyers and sellers, they want to be trading at a higher level from the get-go, that's going to be the next price. And in between, anything in between, it will not get executed. If you have a stop loss or even a take profit, it's not going to be executed until the next available price, which will be the open on Monday. That's something that you need to be aware of for the risk of the weekend gap. Weekends don't always.
I've heard stories. There's a few stories in the Market Wizard series where you have like these millionaire hedge fund traders, and like one story where this guy, this was back in the day where you didn't have internet digital trading desks. So he went on vacation, right? Somewhere out in Africa, where he didn't have any connection or any phone or anything like that, and he was in this massive trade, a short, and like opened gap up, and his office tried to reach him and couldn't get a hold of him like until 2 days after, and it's been opening gap up every day since he went on vacation. So he gets back, and like he's in this massive drawdown, and he just had to close it. And I believe like he missed out, like he lost like a big percentage of his whole fortune on that, right? Just because his orders didn't fill because of the gap up.
Yeah, weekend gap risk is something very real, and if nobody tells you about it someday, and you leave your trades open for the weekend, someday the market will tell you about it. Will let you know what the risk is, and this is what can happen. I mean, what is the gap? I didn't measure it, but from the close, from the open, let me measure it. How big this gap was at the beginning? Let me see. The gap was. I'll put on my screen. Yep.
Wow, that's a big one.
This is the close on Friday, and
oh God, I love you, mate.
And that is that's 30.6 pip gap. That is significant, right?
It is a big one. What do you talk about, Alex?
It is. It's a pretty big one,
yeah. So imagine if you had your stop loss. Let's say you're in a short, and you had your stop loss at, I don't know. Let's put it in. Let's say you enter at the end of the day, and you thought, let's say I don't have. Do I have a stop? Let's assume you have a stop loss there. Where do you think your stop loss will get filled when the market opens on Monday?
First available point.
It's not gonna be on your stop loss. If you think that, you're wrong. It's gonna be executed on the next available price on Monday. So actually, your risk is not capped by the stop loss, but since there is that possibility of the gap, if you're going at full risk, you're thinking, okay, I'm not gonna lose the account because, if it hits my stop loss, I'm well within my the max loss I can lose on an account, this could be,
that could be it.
disaster. Yeah, that could cost you the whole account. And it's
So I guess
it's,
that's one of the reasons why some firms, and actually a lot of firms back a couple of years ago, had the rule that says like no holding over weekends, right?
Weekend
Look,
gap.
It's the same with
Go ahead.
oil. Let's say, for instance, oil. We put an extra swap on for oil over the weekend because we didn't want people holding oil over the weekend, because that is notorious for gaps. And the thing is, if you're funded and you're holding a big position on oil, and then you get gapped, well, you're only losing so much, but we could lose so much more, So it's
Yeah, because the funded trader is only losing the funded account, but the company is still in the position. The company still has to handle the losses throughout all the accounts.
Yeah.
Because that's something you have to realize, guys. Like it's not that it's a pool. It's not that my funded account just I'm just trading that. It's the 5ers have a pool where it's complicated. It's quite complicated, but it's a pool. It's a pool party.
Of course, yes, it is a pool. If this if this were to happen, and you had a TP there, you probably get positive slippage where you TP. Well, your order will be filled much higher than than you wanted, which is always good. But that
doesn't matter though.
Yeah, that's not a problem. The problem is when it goes and becomes, instead of being 1R, you now are in something that it'll cost you 5R. That's where the problem lies. So, but it's something. It's certainly should be something to be considered in your risk management. Actually, I had a trade. I had this trade on Friday, right? I had this trade, and I was aiming for. I believe I was aiming for somewhere in here, and my stops were something like that. And my entries, I'm not sure here, but there were, and those lows within that order block, there were a little, perhaps at the middle of it. Doesn't really matter, and it didn't get to my TP. And as the market was closing on Friday, I had to make a choice. I said, do I want to be, take that weekend gap risk? And I chose not to take it. So I took profit here, and I got, I think, 7R out of the trade, which is not the 16 that I wanted. But hey, I got profit in my pocket, and I don't have risk on, so I can enjoy my weekend with no worries. And in this time, it gapped up. I would have a positive TP, but I would rather miss those profits than taking that weekend gap risk and have it be against me, where it takes more than it should take me. So it's something that should be considered when you're approaching the end of the day on the Friday.
So I always, well, not always, but I hold trades over the weekends. Like I never really think about it. Just if my position is still active, I hold it over the weekend. I've never had any issues with these gaps, and I guess that's because usually it doesn't happen very often in the Forex market, but I guess it does happen from time to time. I guess I just haven't experienced it, but I also think it's because a gap is not going to be hundreds of pips. It's going to be usually smaller. So I guess with my way of trading and my stop loss placements is doesn't really affect me a lot. But if I would be trading, maybe have an intraday trade open, like let's say I have a fairly tight stop loss and I'm in good profit, I'm close to my TP, maybe I choose to have that open over the weekend. But in those cases where you have a tight stop loss, it might become problematic. But if you're trading like me based on daily levels, then it shouldn't be a problem.
Yeah, that's true. In my case, the distance from where we were at that moment when I took my profits to my stop loss was probably around 20, 25 pips, something like that. So I deemed that to be borderline too little. I don't have any data to be exact, but if it's, I can leave them open on the weekend too. It's not a hard rule, but I need to have enough distance. And 26, I thought was too close for my liking. If it's something that has already run and I'm 60 pips in profit, then it is different. I can absorb that risk, that weekend gap risk. But for 26, I didn't really like that. Of course, it didn't work in my favor, but I prefer to be a little bit risk averse than taking extra risk that I'm not too sure about.
So I've removed my orders for GBP, USD, and Euro NCD. So you see that wick right there. That was obviously the wick that I should have been filled on. Like if I would have been filled on that one, then I would keep the trade open and maybe even keep it open throughout the news or close it right before the news. But now that we already had that reaction down here, that was the reaction I wouldn't get in on. So now that the trade, the idea is confirmed, but I'm not in it, so I'm removing orders for this one. And then you have Euro NCD as well. Obviously, looking at the 4 hour here, the trade idea that I had, I believe I had my order down here, but it's continuing this trend here. So for me, I'm removing orders for that one as well. So right now I'm in the NCD CHF long right here and a Euro GBP short, this one right here. So you see that we closed a 4 hour bearish engulfing. We have not closed the gap, so I'm just looking for a quick half an hour trade here to close this gap on EG, which right now looks fairly likely that we're going to get it. I mean, looking at the 4 hour, that wick is not very pretty. And this 1 hour bullish engulfing candle is not very pretty, but this is based on the daily. So looking at the daily, we are hitting the reload zone right here, have a nice wick on a daily here into this resistance area. And you can see the daily trend is quite clear. So I'm just looking for a small move here to fill the gap here for a quick trade. And then again, Bitcoin. If we break that high on Bitcoin, I'll remove orders for this one as well. I'm hoping that Bitcoin trade I'll get filled on the news that is coming out in should be in 30 minutes, right?
No, the news is coming out in 5 minutes, 10 minutes.
What?
There's one news coming out. Yeah, PMI. But that's not the on Forex Factory. In any case, the one in 27 minutes is red folder.
Yeah, we do but the factory PMI.
Yeah.
ISM. That's the one I'm looking at. So that's going to be in.
That moved last time, didn't it? It actually did do.
Because that's because it was quite unexpected, and in I remember talking to Dirk about this. Normally, ISM manufacturing PMI is not a huge event, but in the current market conditions, with everyone watching the central banks, with the interest rates, it's a good indication of the health of the economy.
Mm-hmm.
So
Henry
might
asked,
actually move.
Yeah, Henry, our good friend Henry, asked if EU is a proper break and retest on hourly. Is it?
On hourly, yeah. I think it is. I really do think it is. If we add the EMAs here, see that can remove the 50. We have. Let's see. I mean, if we take the local price action here, I would definitely look at this as a break and retest. So to me, it looks like EU wants to move higher. And if I would, I mean, for me, there's definitely a trade here. I mean, around these levels, there's definitely going to be I think this actually looks like a decent trade. The only thing is, like, this gap is still very, very obvious. And I think we're gonna go take out that gap right there.
Yeah.
So I think we're gonna get a move like that.
The thing is with gap is they the statistics, they tell us that 90% of the chance they will get filled. But the thing is, what's also relevant is when they're getting filled, because they may get filled, maybe later, maybe in a couple of days. And so that's important if we're looking at those statistics to see if the person who recorded that statistic, if it measured within 1 day, within 1 week, with any limitation on the time frame. Because if it didn't, then it's a great stats, right? But it doesn't necessarily mean it's going to be today. Maybe it's going to be in the next couple of days.
Yeah.
But yeah, typically they get filled. EU is very strong, going up. It seems like it had all the selling it needed, and is now firmly on the lower time frame, looking firmly bullish again on the 5 minute, the 1 minute.
Yeah, it is looking quite bullish. I would expect. Actually, I think with the news and everything coming out here, I think, I mean, this is actually quite solid. To be able to get 1 R out of a move like this is quite good.
Someone snatched Alex.
Yeah, his camera just went black and then he disappeared. Interesting to hear what happened to him when he gets back, or if he's getting back at all. Who knows? We'll see. So now we got I'm obviously betting for a. But you look at the 50-minute here. This is such a good example of a trade where you have confluent with this. Rejection on the daily, resistance on the daily, rejection on the daily, 4-hour bearish engulfing candle, 1 hour, not really confluent though. But if you look at the 15-minute, this is a nice break and retest on the 15-minute as well. So I'm good confluence here between all time frames. So we'll see if I can. I'll open up Trading View here so you guys can see that we're actually trading real money here. You actually see the positions I have here. So you see Bitcoin, and this is on the FIBEX with the Bitcoin trade. So got Bitcoin order place, and then we have the Euro GBP here. We can go to the 15-minute. We'll see. Looking for a small move to downside. But now that I look at this, I would like to have my TP here, but not sure if that's going to be worth it from a risk to reward perspective. I'm risking about 800 to make 400. If I move it here, I'm not sure. I'm not sure I want to be limiting the profits too much. Let's see. I'm gonna go back to Trading View. Makes any sense?
I will show my screen, my MP5. Let's see, to show my trades, the ones that I talked about. Let me put it on.
Yeah, go ahead.
Yeah, I'm trying to select it, and it's this one. Right, so this is the trade that I mentioned, and I closed them while my TP was higher. Was in that time it was at 30, and this result is the result of last week. While 1 R is $50, right? So it's just to give you an idea of how my my way of looking at it is different than most people. So I have a small R value, but I typically put on more trades than one on a setup, and my drawdown goes not like 4R in drawdown is not significant to me. It's something normal. If it gets above 10, then I start to, it gets a little bit even then it's not a problem, but I typically can go above 10 easily within a week. But that's to give an idea. This is the trade that I mentioned. I entered. I had a couple of entries, and I eventually took it out here, and I have a couple of other trades as well in here. That these were these. I think this is scalping, so it's not the same. Let me change this. This is the. Let me see. This is the trade right before the gap on Friday, and I have. This is the other trade that I took on. I believe this was on Monday or Tuesday. I'm not sure. That eventually worked well. So basically, it was three setups in a week and produced 36 R as $50. Actually, 34 R's to be exact.
Yeah. Whenever I hear that, I'm like, Alex, what happened? Your camera went black and you just disappeared.
No, I had something quickly I needed to sort out.
Right.
But in a couple of minutes.
I'm gonna have a TP. I'm gonna have a TP hitting here. Look at this. Look at this. It's reversed completely when the news comes out. No, by the way, that was not my TP. My TP was, where is it? My TP was, no, what happened? Did something. Okay, come. Where is it? Where's my TP? There. Okay, my TP is down here, which is, yeah, I want to, obviously I want to fill that gap. Maybe because it gapped from here. I'll actually gap from here to here. So we'll see.
Another reason I forgot to mention why I don't like to trade on the phone is because I don't trade just one account. I copy everything to all the other accounts. On my phone, it's kind of difficult to monitor all the accounts quickly. And I want to know, if everything was copied correctly all the time. I'm responsible for everything on every account. So that is something that I don't like doing if I'm away from my desk. I prefer to have my other terminals open that I can quickly glance at them and see the trades while I open it on my master account, that they are being copied with their stop loss and take profit, and that I don't have, let's say, orphan trades or I don't know, slippages or anything that, when you have the technology, things can go wrong. And even though I double check and I have safety measures in place, you still have to be monitoring those other accounts. So that's something I don't, for all the other accounts, I don't like to be trading from away from my desk. Once it's open, I can manage it and I can be on the go. I can be somewhere else, be it at the beach or anywhere else. But then again, where I am at the beach is not that of a great idea.
The beach is always a good idea. Okay, we got news in soon. Looks like EG is going to
you're gonna put multiple screens on.
Okay, yeah, we got this one. No, we got that one. No, and there's too many. This one.
Nice.
Let's see if I can put on the
news is already out. The other one, the one, the orange folder, supposedly. But since we have the red folder coming up in 15 minutes, perhaps the first one, the orange one, will not make the market move a lot. in anticipation of the bigger one coming up later.
Well, you see got the 1 minute here on EU, S&P 500, got GU down here, and gold. We should put on Bitcoin here instead. What Bitcoin does. Not CME, BTC, USD. Let's do Binance. Let's do spot on Bybit. Okay, so yeah, EU is. Let's look at the 1 hour. What's happening on the 1 hour? Yeah, EU is still printing very nice 1 hour candles. Got Bitcoin. Now, obviously, I want Bitcoin to move a bit lower because that's where I got my entry orders. We'll see what happens here.
Alex, I have a question for you. Since you are, I
Yep.
think between the three of us, you're the one, or maybe Jonathan, maybe you can answer that as well. But I see Alex as the crypto expert between us.
Ooh, no, I'd give that to Mr. Jonathan over there. Definitely up there more than me.
I think
Well,
I think the thing is, like, I don't talk a lot about crypto in these live streams because we're most about Forex, but I think I've been trading. I'd say when it comes to experience, I'm like 95% crypto and 5% Forex.
really,
Yeah.
I didn't know that.
No, like I started with crypto, and I'm actively trading crypto, and I've been trading crypto for about almost 7 years now.
Nice. What else should I know about you, Jonathan, that I don't know yet?
That I have a big fat bag of Bitcoin that I'm not selling anytime soon.
No, but the question was this: if we see today Bitcoin jumped, right, at least at my trading view price feed jumped 4 point something% up, but if you see Sol, and that's why I thought Alex would be great, but I think anyone who could answer this, why? And if you look, Sol is only
Gone on
0.2%. What is it?
I'd go on a daily or weekly, and you can see that it's in a nice consolidation kind of pennant kind of pattern right now.
So what's the question?
No, the question is, why isn't the other coins following Bitcoin? When why are they underperforming? Let's say only today. Why are they're not reacting to the same extent? I mean, 4% Bitcoin, and that altcoin Sol is what, 0.1 is basically break even. Hasn't moved today, but it's
basically why aren't altcoin moving when Bitcoin is?
Yeah,
because Bitcoin is the first movers. Usually what happens is Bitcoin moves first, and then altcoins start to move. You'll see that the best times for altcoins to move, like when you have, for example, when you have altcoin season, which is just a word for altcoins in an uptrend. So when you have like strong uptrends on altcoins, that's usually when Bitcoin has already had a big move and now it's consolidating. So Bitcoin consolidating gives people the opportunity to start moving into altcoins. So usually what you see is like people move into Bitcoin, and that capital, they can make some money on Bitcoin. Maybe take some of the profits from Bitcoin consolidates, and then they move into altcoins. So altcoins and Bitcoin are not always going to move with each other. And there's a couple of good charts you can look at for this. You can have we can look at, for example, Bitcoin and altcoin dominance. So what you have here is two charts with the Bitcoin dominance in orange and the altcoin dominance in blue, or whatever that color is. I wanted to, no, actually Bitcoin dominance is the blue one, and altcoin dominance is. So what you see here is the dominance basically means how many percentage of the market cap is in Bitcoin in relation to the altcoin market. So this is the Bitcoin dominance right now, which means
so basically market share.
Yeah, exactly. So around 55% of the crypto market is currently in Bitcoin, while down here, obviously, then around 40 to 43% is in altcoins. And you can see that while Bitcoin is in, I mean, sometimes they're correlated, sometimes not, but usually what you see is, at least on the lower time frames, if this is true, you'll see here is a good example where one drops and obviously the other one comes higher. So when the Bitcoin dominance drops, that means that money is flowing from Bitcoin into the altcoin market. And I believe this altcoin dominance chart is excluding excluding the top altcoins, and excluding USDT and stable coins and things like that. So
Makes sense.
It's not a one-to-one relationship. You can look at, we can add Bitcoin to the Sol chart, to BTC USD. So you have Sol on the chart, and then you have Bitcoin. Let's look at the daily here. And even though they are following each other quite nicely, actually it's very difficult to
it depends on the starting day, because the first candle is the one that anchors them together. So
let's do here.
They're correlated, but not to the same extent. They're not always moving the same. Like that move up on Bitcoin, or is it? No, I mean, in Sol was not followed by Bitcoin, or the other way around. They did not go together. That where that move went up. And
also,
Bitcoin...
I think also, if the market cap, if the market cap of the whole crypto industry isn't changing, if new money isn't coming into the market, then obviously the money has to be changing from Bitcoin to altcoins, right? So if there's no new money coming in, then people have to sell Bitcoin to buy altcoins, right? So it's an interesting relationship.
Yeah. Although there is a lot of new money, right? Institutional money coming in, if I'm well informed. So that makes it a little bit more difficult. But the ETFs...
exactly. But are you asking, like, in terms of percentage? Why is one moving more than other in terms of percentage?
Yeah, that was my initial question. But of course, the bigger question is, how are they correlated in time? If you zoom out, and that's what it's about the capital movement between Bitcoin and the altcoins, and that makes perfect sense to me now.
Yeah, I think we can look at when. So Bitcoin broke out October 2023 when you had the massive breakout. Look at Sol. October. Yeah, it's the same. Let's look at Bitcoin. So we could say that Sol kind of like broke about that high on like the 25th of October. And we'll look at Bitcoin. Bitcoin did it at the 23rd. So
2 days earlier.
Yeah, 2 days earlier, you had a massive breakout on Bitcoin. I think that there's definitely a lagging relationship here, with Bitcoin moving first and then altcoins follow.
Wow, but that seems a huge opportunity then.
Yeah, it really is. But then also in some cases, at least when we had like the 20, if you look at 2017, so the top was at the 17th of December. And then we could look at something like, what was one altcoin back then? Maybe Cardano. Let's look at 2017. top. You see, the top for Cardano was in May 18. So while Bitcoin topped out in December of 2017, altcoins like Cardano continued to run in 2018. But maybe that's because this is an old chart. Let's see if we can find, maybe Bybit has longer. I mean, the
So basically,
Coinbase.
you can use
Bitfinex.
basically you.
Yeah, Bitfinex. But Bitfinex doesn't exist anymore.
Yeah, of course it is.
No, did you say Bitfinex? Or
Bitfinex, yeah. Not Bittrex,
okay,
Bitfinex.
no.
Bitfinex is OG. Maybe they don't have Cardano. They should have Cardano.
But basically,
Qcoin.
you can use Bitcoin as a leading indicator for
Why is Qcoin
having a
not on there?
bias on your altcoin. Then
Yeah.
news in 3 minutes, guys.
All right, let's look at this one. Okay, so what are we thinking? I'm thinking. EG is about to hit my TP here. That's nice. Got E. Let's just take a look at that one. Nice, looking good. So what I'm gonna do now is I'm gonna close that trade, because there's no way I'm holding this open when that close to TP during the news. I've just closed that one at these lows. So it's a 0.4 hour trade. Better than seeing the whole move retrace if there's like massive unexpectancy. So the only one I have open now is NCD CHF, and I have orders in for Bitcoin. So at least made some money today on EG.
Nice.
Looking at this one right here, we are on the 1 minute seeing risk off moves. Definitely, we're seeing that EU is now dropping lower. That 1 hour candle is going to close in 2 minutes. Can very well close as a bearish candle, but the wick on the 1 hour candle here is quite telling with the news coming up. And then we have S&P 500 testing the local range lows. We got Bitcoin kind of dropping lower, but not a lot.
S&P 500 also has been Friday printed the second bearish order block on the daily time frame, which may indicate perhaps coming sessions it may not continue going higher, just being range bound, or perhaps putting in some local tops.
All right, let's see what's happening here. By the way, we have a question of, is it possible to close a position during the 4 minute window? If you're on high stakes, it's the same on high stakes and bootcamp, but different from hypergrowth, right?
Bootcamp don't have the news restriction. So bootcamp and hypergrowth, you don't have anything to worry about. It's only high stakes. Yeah.
Yeah, and I'm on hypergrowth.
You're on hypergrowth. Yeah.
Yeah. Yeah, and you can close a position, right? Unless you open that position, just to make money on the news. All right, let's see what we have here.
How is gold doing?
Gold is... Guys, let us know in the comments what time frame you want to look at. You want to look at the 1 hour, 5 minute, or 1 minute like we have right now? Well, I guess it's too late. This news is coming out anyway.
And 20 seconds is coming.
Yeah.
I don't have any expectation.
I do feel like I don't have any expectation, but looking at price action, I do feel that we're going to get a risk off move and we're going to fill the gap. We're going to fill all the gaps. Yeah, that's what we're getting right there. Ooh, maybe not. That's a big move. That's a big move to the upside. Oh, wow.
That's a nice wick.
Yeah, EG would have hit my TP. But I think could have just gone the other way around. So I think that is better.
Yeah, I think you did the right call right there.
Yeah. So let's see if we're going to get a reversal. Usually, so I see this as the initial move is bullish, and usually what we'll see is the initial move gets retraced. That's usually what I see. Like within the 1 hour candle, you'll see the initial move get retraced.
I like GU for short. Not right away, of course, because the news is still fresh, but it came into the area that I have as a sell area.
It gapped up on the
And
1 hour on Oanda. Again, that's crazy.
Yeah, it did
That
it.
was-
You can see it on the 1 minute as well. That
Why-
means that there's
How come there's okay? So this is the second time in a day that you have a gap up, because you have a gap up here as well. That's a weekend gap, right? And you have a gap here as well. It's not very often I see gaps like that.
We
no.
had a gap as well on the 5ers, I think. Yeah.
Yeah, that's not very normal. I guess that tells us that there's a lot of unexpected outcomes.
Yep.
Okay, so let's look at Bitcoin. Bitcoin didn't really do much here at all. I do hope that it's going to continue lower though.
You mean on the higher time frame?
Yeah. I mean, I'm still looking for that retest of lower levels before moving higher. NCD, CHF trade not really happening much here as well. But EEG, I think all in all, I should be happy with about half an hour profit today. I think that's more than more than enough. I had at the start of the live stream, I had about 6 pending orders for 6 different setups, and now I'm only left with 2. So it feels like I started with high confidence, just shooting out orders, and now ended at a good level, a more comfortable level.
That's what I wanted to ask. Do you like when that happens, when you have a lot of opportunity and it automatically filters out the other ones and you're left with fewer but probably better setups?
Wow.
Yeah, definitely.
Didn't get the entry that I wanted to get on there.
Which one?
It would have been nice to pop off, taking the highs, and then come down. That would have been a nicer trade, on EU.
Look at the trade I had on. Look at this one. I didn't take this one, but I said look, that's an easy 1 hour right there. That would have been nice. But no, yeah, Victor, like you said, I think it was good because I started by adding orders to all the trades that I thought looked good, and the more time developed, the more price action developed, I had the I had the opportunity to filter out, depending on where price moved. So I think that's definitely a great feeling to be able to limit the active positions.
Price is filling the gap, or at least is trying to fill the gap on GU. I mean,
it did. It did fill
on
the
EU.
gap
It already
on,
did.
Yeah.
On EU, yeah, but on GU it hasn't yet.
No, on
that's
and it didn't fill the gap on EU. I mean, isn't this the gap?
No, I mean on the 1 minute. I'm sorry.
Oh, okay, yeah.
On the 1 minute. The PMI.
Right. Okay. That. Yeah. Okay. Yeah.
You expect that to happen before it continues up, right? Because that would be where more buyers will come in after filling the gap.
GBP CAD actually looks like a pretty decent trade opportunity here. I'm definitely going to be monitoring this one right here, because if you look at the higher time frames, you can start with the weekly. This is a decent decent break and retest. I wanted it to come down a little bit lower, like down to this level, but this is also this is also a support area right here, which I find interesting. So it's still a break and retest of this level right here, and then on the daily you can see that's a good daily candle right there. So there might actually be the opportunity to go long here. And with my half an hour TP, it's such a small move. Like, we're looking for just a very, very small move here. But I think it kind of makes sense here. But that's
Nice.
yeah. When we have balance of trade, we have that in 2 days. I mean, the 4-hour candle already confirmed the breakout right there. What is the 1 hour doing? A clean level here on the 1 hour as well. So I might actually enter orders for this trade right away, and then remove the orders if it's not confirmed.
Is it just me, or is EU looking like it's holding support in this area?
Yeah, Wix is closing the gap as well. It just has to be,
I wouldn't be surprised if it fills in that shadow at the top, that wick at the top.
When you talk about filling a gap, it basically just means that price is trading the gap. It doesn't have to be candle closes or whatever. It just, on any time frame, as long as it trades down to fill the gap, it's filling the gap.
Yep. So that means the wick is enough.
Yeah. Okay. Yeah, I'm going to be entering orders for this GBP CAD trade. It looks quite good. I think that's a solid break and retest, massive level. Look at this. This is a huge level right there. Yeah.
Pound closed the gap, filled the gap on the 1 minute on the CPI gap, the one formed after the news came out a few minutes ago. So now we could see some buyers coming in as the gap is filled, but that's the question: will they come in? Will they?
I think it's holding as support, actually. Let's have a look at this. You know what? Might be for a low risk trade for $500. I'm willing to place my money on that. I think
on EU, is that?
On EU, yeah.
Going long, you mean?
Yeah, just going long now, risking 0.5%.
Mm-hmm.
Man, I gotta.
If it would have smashed through now, this little range, this little bit of accumulation, and different story, but it hasn't. It's like come down, wicked up, come down, filled the gap. Consolidated, price getting weaker. Divergence on the stochastics, even though it's a divergence on the 1 minute, it's still something. So let's see if we get a little pop on this.
Not only that,
Man,
but after the news, everything, the time frames 1 minute becomes actually too long. So divergence on the 1 minute after the news could be more relevant than in another situation.
Mm-hmm. I opened up a new OND account, a personal account, and connected it to my FX book because I wanted to be able to show a verified track record, basically. So I connected the OND account and everything to my FX book, and then to the trade copier. But of course, when I copy it to the trade copier, for some reason it didn't copy over the last two winners, which is insanely frustrating. It's It's
Okay.
not a lot. It's just 2 trades, but it's like
You're going to have those when you copy. You're going to miss trades, and hopefully they're loser, but sometimes they're the winners.
yeah. But I'm gonna I need to change the trade copy that I'm using. That's not supposed to be happening. I'm up 1% though. That's good. Up 1%.
That's very
but
good.
It's
That's very good.
It's such a small account though. I think I need at least like $1,000 to even make it. Otherwise, the commissions and everything is just gonna be nothing. It's pretty good. It's pretty nice. I have regular people have savings account, but I have Forex accounts. But I make more money on. No, I mean, people usually save their money in a savings account, right? But I save them in the Forex account because I make more money on that than I would do on my savings account.
You got a point there.
Yeah,
you do have a point.
Unless I guess the savings account is not gonna gap up or down.
I'm gonna have to get off, boys. It's a little bit late for me.
Yeah, it's getting later as well. I'm gonna drive my son to the soccer practice as well, so gotta take care of that. Man, I love kids soccer matches. It's like the time when parents just get to scream at each other and go absolutely nuts. Oh, it's insane. You can see
you guys in a bit.
All right, take care.
All right, bye.
Gotta get the layout fixed here. All right, yeah, I guess guess it's getting